Hello everyone and welcome to today's webinar, Figured 101 on building scenarios. For those who don't know, scenarios are a powerful way to build out long-term plans for your clients. We're going to be building a status quo scenario today, something that I believe that every farm can benefit from. It's a great starting point for modeling things like BPS changes too, which is especially relevant in the UK economy today. Scenarios are also used for things like what-if plans, like succession planning, acquiring new property, increasing the size of the farm that you've got, and more. So let's dive into that today. On today's webinar, you've got your main three people, myself, Partner Success Manager at Figured, as well as Paddy and James Higgy here. As always, if you have any questions while you're using Figured, you can reach out to our team using the green chat bubble that's in the bottom right-hand corner of every page in Figured. That's a way to get live customer support. We answer questions very quickly. From there, we're able to see what you're working on inside of the product, and we're able to pick up the phone and give you a call if there's something that we can't explain over text. You'll also find a link to our help center inside of that, which is full of written guides. You'll be able to watch previous webinars, including the preceding Figured 101 webinars on our YouTube channel. And you'll also receive a link to our blog, which is full of case studies and other product updates. Just as a quick recap for the things that we've covered in Figured 101 so far. Our first webinar was going through the different parts of the product and explaining how they can be used. Then we launched into the three main components of farm advisory: understanding the now, which is looking at using crop seasons and livestock trackers for driving on-farm profitability. Today, we're going to be looking at working towards the where, which is all about creating ideas and coming up with a sense of direction for the farm over a long-term plan, say 5 to 10 years. Next week, we'll be going through how we put that plan in action, which is by creating a monthly forecast and then being able to review that often against zero actuals, which automatically sync through with Figured. So as a reminder, when we look at the way that we use Figured, we always look at it in the lens of this now, where, how. And today's webinar specifically is going to be on the where and creating these long-term plans. Now they can be used, they can start using zero data as the opening position for scenarios. And that's a really great way to build on the work that you've already got inside of zero. If you don't have zero data just yet, you can still use scenarios standalone. And I'll show you guys how that works in a quick second too. So scenarios are quick to build, they're quick to collaborate, share, and copy. And they're all about making your plans, getting them out of your head and making them visual. That makes them accessible and it makes it easy to be able to work on these plans too, especially when you need to start bringing in other members of the farming team. We know through our experience of working with other accountants, advisors, and bankers that the 5-year outputs or the multi-year outputs that come out of a Figured scenario is really powerful for a wide variety of situations. Specifically, just as an example, scenarios are often used for those who are going out seeking more debt or to repay debt. And that's something that works really well with a banker who's generally expecting to receive a 5-year cash flow forecast. And you can build all of that out of scenarios as well as inform your own team about where the direction of the farm's going. When we look at building a scenario, we're looking at the 4 main components of a business. We're looking at the assets. So that can be things like the land you have, that can be stock you've got in store, any accounts receivable, you've got your liabilities, so the things that you need to pay. And we know that Figured is really particularly built around helping you model debt, and that liability section is going to help you with all of that too. Once you get your head around the assets and the liabilities, you're then playing with the income, which we allow you to augment by using the same stock trackers that you use on your regular farm to be able to model out your 5-year plan. So you've got your income, which is built out of trackers if you want to use those. And then the expenses that are on the farm. So your outgoings when it comes to cash. So the scenario is made out of these 4 key components: the assets, the liabilities, the income, and the expenses. If you don't want to go into the work of building out a balance sheet, you don't need to. You can use Figured solely for those income and those expenses. However, and you'll see this in a minute, You'll need to bear in mind that if you don't put in the assets and liabilities, obviously you won't get a balance sheet coming out of figure. So that means that you can use scenarios just for modeling cash flow if you want. But if you do go into the detail, and I'll show you how you can do that really easily in a few moments, you'll be able to get a whole lot more that comes out of it. There are a few reasons why we want to be using scenarios. And like I said, we're looking at those four key components: the assets, liabilities, the income, and the expenses. When you create a scenario for the first time, you can either manually enter in the income and expenses. However, if you have data inside of Xero, you can import that in. So that means that when you are creating a scenario, it's a lot quicker because you've already got a really solid foundation of data to use. After you import, you then have the opportunity to enter in your assets and liabilities. And that's a great place if you want to bring in absolutely everything. If you don't want to bring in the assets and liabilities, of course, you don't get that as an output. But if you do put them in, we'll also give you things like equity positions and your loan to value ratio. So that LVR, which is also really beneficial for talking to bankers and going to loan officers. Once you set up all of this data, and it'll only take a few minutes to do, you'll then be able to model the changes that you want. And I've got a couple of examples here just to give you a bit of inspiration. So we can do things like looking at changes to the assets and the liabilities. If you're a livestock farmer, you could model what happens if you purchase a new herd or expand your herd, taking on a new loan, or even just business as usual. And what we're really going to emphasize in today's webinar is looking at their business as usual, or what we call a status quo scenario. Now, I'm a very firm believer that every farmer can benefit from having a status quo scenario. So for the accountants on the call, you'll be able to see how you can quickly build these out for your clients, and it's something that they can really benefit from. Before we go into the process though, I want you to understand the outputs and the things that you're going to get out of putting in all of this effort. The outputs need to match or need to be greater than the work that you put in, right? So the output that comes from a scenario is twofold. You get your standard core multi-year reports, and these are really important. Your financial summary, which gives you an overview for some key stats that are on the farm, including EBIT. You'll get cash flow reports, so looking at a 5-year cash flow. Where is that money going, your income and your expenses? We'll give you a 5-year P&L inside of that too. And then if you put in the work for the balance sheet, you'll get a 5-year projected balance sheet out of figured as well. That being said, when I normally take people through scenarios for the first time, especially farmers, the very first thing I'll go to is actually these key performance indicators, because I think they're a clearer way of showing some of those key stats on the farm. They'll bring out things like net profit, closing cash position, bring out some of those production metrics and put them in a visual form so that they're easy to digest. And usually when we do things like that, we'll look at figures like net profit, or we'll look at things like the closing cash position. And when we want to dive into those numbers, that's when we go up a step and we go and take a look at the multi-year financial reports. So these can be used in tandem. You've got a really powerful set of reports and outputs that come out of here. With all that being said, with this little bit of background, I'm now going to take us into the product and actually take a look at things so that we can build out our own status quo scenario now. We're going to be building this out because, again, we think that this is something that every farmer can benefit from. And if you're an accountant listening, get in touch with us and we can show you how you can even structure this work internally in order to benefit most from having junior resource to build out the bulk of these. So we have a playbook and we have other materials that we can send through to you. Just get in touch and we're more than happy to take you through the journey for that. Right. With all of that being said and done, let's go into the product and take a look at things. So I've got my figured account here and I've got my golden farms, our classic demo farm set up here. You'll see that we've already been working on a couple of scenarios. So if you have some set up, you'll be able to see the list of them right here. With these scenarios, we don't have to share absolutely everything with everyone. So if I'm working on a scenario, for example, I could be working on that. I could build out my status quo scenario, but I can keep it private for now so that if I've got, say, the farmer or I've got another advisor on the farm, they don't necessarily need to see everything involved in it too. So that's great if you're doing a work in progress and you don't want to show it to everyone. So I could be working on a scenario, and then Paddy here would be able to see it only when I allow him to. Now, scenarios are available for all Figured farms who are using the Financial Farmer license of Figured. Or if you use Figured Lite, you can upgrade to Figured Lite Plus scenarios as well, which is a great way to launch into advisory and launch into using scenarios for business development. Let's go ahead and create a new scenario now, and let's go through the tips and tricks of actually creating one. So we're going to click Create New Scenario up here. And this is then going to take us through to a page where we can fill out a little bit of information about what we're building today. I'm going to call this my status quo. And the type of scenario I choose, I'm going to call this an annual review. We give you these sets of types so that when it comes to filtering and searching through scenarios later, it's a lot easier to find the ones that you were specifically working on for, say, expansion. Now we're going to give it a quick description. Status quo, assuming everything stays the same for the next 5 years. And that description can be as long as you want. And I really encourage you, be detailed inside of here. Talk about the things that maybe you're making an assumption of, or some of the things that you're grouping together with your scenario. These have no limit to the length of them, and they can come up on the reports as well. So this gives you a great way to be able to distinguish between the different plans and the different things that you're working on. Now we'll choose our start point. So my financial year goes from April to May. This is just the beginning of your financial year, so I'm going to use 2020. The length of time is the duration. So this can be as low as 1 year. However, if you're only doing a 1 year scenario, I would recommend you take a look at doing a forecast. That's the thing that we're going to be covering in next week's session. But it can be as low as 1 year and all the way up to 10 years as well. Now, the reason we're using a scenario instead of a forecast for these long-term plans is because it pulls us up a step. Instead of looking at things on a month-by-month basis, we're going to be looking at things on a year-by-year basis. This is going to let us see the forest for the trees, as it were. Pulling things up a step, I find that 5 years is generally the sweet spot when it comes to building out a scenario, because it's long enough into the future that maybe you don't necessarily know how it's specifically going to end, but it's short-term enough that you can have realistic expectations inside of here. We know that most bankers will ask for 5-year plans. However, if you need to, you can extend that all the way out to 10-year plans as well. Next up is our privacy or our sharing options. And this is what I was talking about earlier about how I can work on a scenario here, but then Paddy, for example, I can keep it private from him while I'm still working on it and then share it with him when I'm ready. If I set it to shared, that means that everyone who's on the farm can see that scenario. If it's private, then of course only I can see it. And I work at Figured Support, of course, so that means that if I set it to Figured Support, only Figured can see it. So anyone who's a part of my organization can see that scenario, but someone who isn't can't. So that means if I'm working on this and say one of my team members like Paddy is going to work on it as well, I can set it to share with Figured Support so that we can both work on it together, but the farmer can't see it. And I'm doing that because I want to keep this as a work in progress for now. This can be changed later down the track too. Then our operation type. So I'm going to set this one up as a dairy and a crop farm. We can have a little bit of both. You can have, the farm operations exist for you to be able to, again, filter through these scenarios later down the track. And the metric I'm going to choose to run it on is going to be on a pounds per hectare basis. So you'll remember in that first Figured webinar, or the second one as well, we set up our properties and our fields and the size of the farm. That's going to determine our pounds per hectare, but also you'll be able to see in a sec that we can add in a land asset with a custom area. So this will solve some of the quirks that happen with structures, but I'll explain more in a sec. So this is my status quo. 5 years, I've got a nice description inside of that. I'm going to be running things on a pounds per hectare basis. Let's click next. And here's my starting point. So I know I've got some good data coming through that I can use from zero, or I can start from a blank scenario. If I don't have data inside of zero yet, I want to start it from a blank scenario for now, because that means it's not going to try and import any kind of half-finished data. If you've got some inside of zero, importing is a great way to get a kickstart on the income and the expenses. So we can pull in that cash flow from zero and use that as our first year inside of a scenario, which is what we're going to do today. Now I choose what set of data I'm using, so my actuals and my forecast. Given that I'm partway through the year, I may choose to use last year or this year's data, but I'm just going to use 2020 here, pulling it in on a cash basis. And then I've got my trackers and my income, so I'm going to use my livestock, my milk, and my beef cattle trackers here. I've got my other income being brought in, so those will be things like my BPS payments. I'm going to be bringing in my expenses, so I've got some farm working expenses that I'll be using as well. So let's import and create, and this is going to start creating our scenario. Now, a scenario will take a little bit of time to create. What it's doing is it's making a brand new version of Figured inside of itself. That means that the things that we work on in this scenario won't go back to the rest of the tool. So I can really play with the numbers. I can really flex them. And I know that it's not going to impact my now. So it's not going to change those trackers, and it's not going to change my zero data. And it's not going to impact my budget or my forecast into the future. Scenarios are standalone and by themselves. So they do take a little bit of time, but you'll see later that this gives us a great playground to be able to work on some of these numbers. You can see it importing everything. Now that it's ready, we've got our green tick, and it's going to redirect us to start the scenario. Cool. Welcome to the opening position. So when we talked earlier about those four components, remember the assets, the liabilities, the income, and the expenses. This is where we can enter in our assets and our liabilities. So with the structure of some farms, we know that you may have, say, a combination of a partnership and a company. You may have some assets that are held in a different entity. And by building out your opening position like this, you can bring in anything that you want to bring in here too. Remember, this won't impact any of that zero data. So you can even put in the market values here if you find that's more relevant than using the book values for your assets. When I do this, the very first thing I want to start with when I click Add Asset is I want to put in my opening cash position. So how much money do I have in the bank? Remember, this is generally going to be from the start of the financial year my plan is from. So this is going to be from the start of 2021. I'll put in a figure here, and I'm just going to put in the bank balance that personally I want. I wouldn't mind having a couple of $100,000 in there. But if you're in an overdraft or you're in a negative balance, you can set that to be overdrawn, and Figured can calculate some of those overdraft payments for you as well, based on the cash flow that we forecast. So we put in, if we're in credit, if we have a bank balance, we'll put that in. If we're overdrawn, we can put that in as well. And if you know that you already have a facility limit, say I've got $100,000 in here, we can put that in there. And then that means that if we do dip into the negatives, Figured can show you, and it can, show you that negative cash balance. So let's put in an amount here. I'll put in 4% as our rate and hit save. Again, the next asset that we generally want to add here is our land. So let's put in the rural property here now. If you own your land, you want to enter it in as an asset. If you don't own your land, so you're a contract farmer, or maybe you're on a lease, you don't enter in the land here, you'll enter that in the next step. But if we do own it, we'll just call it land. We can enter in the size of our farm and the value per hectare. And it's up to you whether you want to put this at your book value or your market value. Let's hit save. Now, the key to building out these scenarios is doing it nice and quickly. When you've got things like machinery, so maybe I've got some tractors or some sprayers, I could go into the work of adding every individual sprayer or every individual tractor. However, if I'm not planning on modeling and I'm not planning on changing those assets, you'll often find that it's faster and easier just to group them together. So instead of having every individual item, you just create a single asset called machinery and equipment. If you do want to go into the detail though, you can manually add in every individual one if you want to. But if you're, say, an accountant building out a scenario for your client, and say you're building out a scenario and you aren't sure into what parts of the detail they'll want to go into, start by building out with just a grouped asset, because you can go back and edit this later. The things that we work on now aren't set in stone. So by grouping things together, you get a big time saving. And then if you find that the farmer wants to go into more detail, then go into the effort of splitting everything out. It's up to you. I'm going to group mine here for now. Call it machinery. And we'll just give it a value of £20,000. There are other types of assets that you can add inside of here. So if you have property or if you have shares, you can enter those in too. Otherwise, there is a catch-all other, which is where you can put in things like accounts receivable or any other assets that maybe aren't included in this previous list. If you grow crops and you want to be able to model crops and you have some inventory on hand, you can add that in now as well. So if I say grow wheat, I'll just call this wheat. We're not working specifically to a harvest year. You'll see in a second that this is just for simple planning. But I could open with, say, some inventory on hand. So let's say I have 50 tons, and I'll value that at 150 tons. And that'll have an impact later when it comes to recording sales. So if you have, say, stock on hand already, you'll want to enter that in there. But you'll also see for my livestock that's added those in automatically too. Then looking at our liabilities, we have a few different types of loans, and we do allow you to separate between what's a bank loan and a family loan, because we know that some banks will treat those two things separately when it comes to priority and being able to pay debt. I'm going to start by putting in a loan here. If I know all of the details of the loan, well, I might want to put those all in here now, because we know that Figured can plan for loans mid-year. So I could say, open with a £500,000 loan, but I know that I've already paid off some of it. So let's say that I'm opening with £300,000. That means that Figure can show you the rest that's available if you were to, say, redraw down some more. If you don't know the loans that are on a farm and you just know the totals, that's okay as well, because the idea here is that you want to get a rough plan for things and refine later as you need it. Just like with the machinery and equipment, we can just put in a total here now and then split it out and add in more detail as we need it. There are different types of repayment rates. So if you've got an interest-only loan, it's easy. You just plug in that rate and then Figured will calculate the payments into the future. Same if you have fixed monthly or annual payments, you can put those in here too. So let's say this is a 4% rate and we're making a fixed payment of £2,000 per month. We can enter that in. And by putting in the effort to put in these loan repayments and these loan interest rates, Figured can calculate what that payment should be. So this will automatically go into your cash flow for you. Again, if you're not using assets and liabilities and you are just doing a cash flow scenario, you'll need to manually enter those into your expenses. But by using the liabilities in the balance sheet, we can calculate that for you. And we'll put in loans, we'll put in things like hire purchases in there as well. So let's say we put in another fixed repayment rate. Let's say it's at a higher rate. And we can enter in any other liabilities in there. And if there's something that isn't a loan, clearly, we can put that in as other, just like we do with the assets. So that could be your payables, or if you have any other liabilities that to be aware of inside of that. I'm going to keep this scenario quite simple now, and I'm just going to leave it at that. But you will receive the sense check at the bottom by looking at that opening position, which will show you your totals. It will show you your equity percentage, and there's that LVR, that loan to value ratio. When we're happy with building out our assets and liabilities, we're then going to click next. And that'll take us through to the proposition. So all we were doing with that opening position was setting up what are the assets and the liabilities, the building blocks of the farm. The proposition is where we're going to play with that. So that's where we're going to look at, say, buying things or selling things, incurring expenses, earning money from milk production or from crop sales. I'm going to take you from top to bottom when it comes to this proposition. And starting from the top, there is that opening where you can just quickly check to see that same sense check you saw on the previous page. Then we have the assets and liabilities again here and what we call the proposition. And if you click on any of these, it'll then allow you to look at the model behind it. So if I have a loan, I could look at different types of interest repayments here, or I could look at different interest rates or different repayments or structures. A really common use of the proposition is for those who are looking at consolidating debt. So being able to create a new loan, draw it down, reduce those old ones, and looking at the impact that a new interest rate and a new consolidation has on your business. If I'm looking at creating new assets or new liabilities, I add to that proposition. And I'll get the choice between the three, whether I'm adding an asset, a liability, or just adding in a fixed amount for equity. That can be anything you want it to be. However, generally you'll be playing with these assets and liabilities, looking at, say, if you want to add or purchase some property or some more land, you do that in here. And the great thing about this is that we can link a loan to that. So if you were to go, say, plan buying some machinery and you know that you need a loan, tick add funding source, and then we'll go in and we'll then pop up and say, right, what are the loan details going to be for this so that they're linked together? Moving further down from our proposition, I'm now going to show you our income. And this should look quite familiar because these are our trackers, similar to how we have trackers in the rest of the product. But when you click on it, you'll see that it's just a little bit different. If I look at my milk production income here as an example, I've brought in my monthly milk figures. However, I don't need to work on a monthly basis. I can just pull this up a step by ticking use custom monthly, or unticking it, I should say. Now I can just work on an annual basis. So looking at my 21, I could plan for a different production per litre or a different price. I can increase or decrease the number of cows milked as well. And now we're going to dive into a bit about how we use scenarios for time saving and building out these plans in particular. I'm doing a status quo, remember? So that's assuming that every year is roughly the same as the last. 2021 is our imported data from Xero and from Figure. Because I'm assuming every year is the same as that one, I want to select it to start in 21 and then spread. And then that copies all of those figures across right into the future. Now, if there's a change I want to make in here, say I know if there's going to be a milk price change, I could put that in. But that spreading is how we're going to do scenarios really quickly, how we're really going to speed up this process. You will probably have noticed that there is this 2020 figure here, right? Remember that we're starting from 21. So why do we have 2020 inside of here? Well, we know that for some milk operators, there are accruals from last year, which have an impact on this year's cash flow. So you can put in last year's figures if you want, which will then allow you to have the correct cash flow inside a figure. But that's down to the milk supplier that you have. We'll hit save. And then that'll give us all of this new income coming through into the farm. Now, remember, we have the three main types of trackers inside of here. So we've got a milk tracker, we've got livestock, and we've also got wheat, or an arable tracker, I should say. So remember how earlier we set up that opening crop on hand, so we knew we had some inventory. Well, inside of here, we have a very simple table to be able to plan for your crop income and sales, or crop income from sales. So let's say I'm going to plan out. I'm going to say I'm going to be planting 50 hectares and I'm going to get a yield, I'm just going to keep it simple, at 10 tons per hectare. You can now see we've calculated what's the total amount that'll be grown. But we know that we have some inventory from last year, so we've actually got a bit more on hand. But we're not trying to go into all of the specifics here. We're just trying to keep it nice and simple. So let's say that I'll be planning on selling 500 tons. Let's say that we generally keep a little bit on hand because of the way that we're selling stock into next year. Put in a different price into here. So let's say it's 150 pounds per ton. Then we have our closing crop on hand, which we can value as we want it to. So we could plan for this to be valued at, say, 100 pounds per ton on our balance sheet. But the key here is, again, being quick about it. Copy, spreads it right into the future for us. We also know that due to the way that people like to work, you can change this area quite quickly. So you could flex this up. You can flex it down. You can do what you like with it. But let's save that for now. And if you're planning on growing other crops, we don't need to have a planting for wheat every year. We can always add income and add another type of crop here. And you'll see there's a full list inside here as well, just like the rest of the product has. So now we've covered our income for milk and we've covered our income for cropping. Let's quickly look at our livestock. And this should look quite familiar. This is a stock rec. So you can go into lots of detail on this. If you want to build out a full stock rec for 5 years, and the output, you will get a full stock rec for 5 years. So if you want to do some really intense herd management, you can do that inside of a scenario. You've even got target closing. So you can look at how many do I want to close in the end of the year? And then how am I going to get there? So what's my variation? However, generally what I do here is I go right down and I hit copy. And that'll copy that right into the future for you. Again, keeping it nice and simple. Using last year's stock rec to push it right through into the future. Now, this tracker will automatically build in births, deaths, and aging for you as well. And you can manage those auto calculations up at the top here by turning them on or off, or by using last year's quantities. So let's turn these all on and I'll hit save here. So if you want to manually do a stock rec, you can. If you want to let Figure do the birth, death, and aging for you, you can as well. But you'll see what I did. I just spread it out into the future. And then same for my beef cattle. I'm going to go down and I'm going to do that. I'm going to spread copy, confirm, save, and that's just copied the same thing right into the future for me here too. Finally, moving away from our trackers, we do have other income. So if I've imported some income that I didn't have assigned to a crop tracker, I want to zero that out. So that's what I'm doing here with my winter wheat. I can see I've already got some sales here. I'm going to zero that out because I've already put in a crop tracker earlier, which is where my other income is going to be from. But this should look familiar to you as well. Now, maybe not these specific accounts because this is my farm, but when you open this on your farm, you're going to see the chart of accounts that's come through from Xero. So you'll be able to use the same codes as what you use inside of Xero. Or spread, copy that right into the future, and we can put in any other income inside of here too. With basic payment reducing into the future, you may want to go in and probably put in some of these changes here now so you can model those out into the future too. And then see that reduction in action. Now, I don't have the specific numbers for this particular farm since this is a demo farm, but you'll be able to enter in the specific ones for your farm as well. This is a great way to model the payments that you might receive from other schemes or what you're expecting to receive from the future schemes that'll be coming into the UK soon. But let's hit save. Now that's put in my income. Now I've got my milk, which I've modeled because that's an easy way for me to work with milk. I've got my wheat because that's an easy way for me to work with wheat. What am I planting? How much am I selling? How much money am I making from it? I've put in my livestock and I've spread those into the future. I've added in some other income, and in this case, I've decided to play with those BPS figures. As we go down and we look at our expenses, again, you can see I've pulled in some of this from zero, right? So I've got some farm working expenses. This will show you it on a detailed view by default on just the pounds that are being spent. If I go right down to the bottom, I can take that and I can spread it just like we do in other parts of the product. A really common way for people to work as well, though, is when it comes to those expenses, is planning a little bit of inflation inside of that. So you may put in, say, 1% and spread it, and that'll flex it up for you. The neat thing about the spreading, though, is that it can go both ways. So if I want to, say, model a constant decrease, if I put in a negative amount, it'll spread it across them all and decrease them all for me too. If I want to, say, work on a pounds per litre for production, or a pounds per cow, or a pounds per hectare, I can do that inside of here by swapping between my toggles. And this allows me to, say, work on a simpler basis like pounds per cow or pounds per hectare. There is one very key thing to note here, though. If you want these to link to your hectares or link to your cows or your litres, so that if you change the litres, the expenses change automatically, you need to do it the other way around. You need to enter in your expenses first and then your income. So I'm doing it now, income first, then expenses, but if you want them to link, do it the other way around. There are other types of expenses that Figured can plan for as well. So we'll hit save for that and take a look. Now, do you remember earlier when I said that if you don't own your farmland and you are leasing or renting, don't enter an asset? You need to enter that in the lease and rent line of your expenses. So if you click on that, it's going to show you what's the cost. So specifically when it comes to land, I want you to entering that inside of the lease expense. How much are you leasing? What's the effective area of that if that is different? And then the cost per hectare. So how much are you paying per hectare for your lease? And you want to enter that into here so that it shows up for your pounds per hectare breakdown. Your rent expense is just rent. Your lease expense is where you're going to put in anything that impacts your area. And again, you'll probably just want to put in 1 year and you use that spreading tool to push it across, okay? So if you don't own your land, enter in your lease and rent inside of the expenses. You can plan for other expenses or other outgoings inside of Figured too. So I have interest here. Though remember that our interest is going to be calculated based off of the things that we put inside of that opening position for those loans, or any of the changes that we make to the loans inside of the proposition. So interest payments can be automatically calculated for you. This is also where you play with overdraft. So if you're reducing or increasing your overdraft or your rates for that, you can do that inside of interest. The scenario won't calculate depreciation for you, but you can plan for a pound amount directly inside of here. Figured has a very simple tax calculator and it will never replace a good tax planner. but it can help augment some of that by just doing a very simple look at what the effective rate is and whether you're accruing any tax losses year by year. However, if you are looking to do a big tax plan, I do recommend talking to a tax planner through your advisor, and they'll be able to help you go into more detail about the impacts of some of the decisions you're making. Then we have our personal drawings. So if I had that coded inside a zero, that would have pulled through here. One of the first places that we look when to change some of these personal drawings to be lower. And then CapEx as well, you can plan for directly inside of here. Having gone through all of that, we're now taken again through to our summary. So we've finished our work inside of the proposition. We've gone to our assets and our liabilities, and we've modeled those out. We've put in our income and our expenses, modeled that out. Now we have our summary here as a quick explainer for the things that you've been working on. And that's when we're asking what metric are you going to do it in? So mine is set to pounds per litre. We give you another overview of some of those key production metrics inside of here too. But then as we go down, we see a financial summary. We see net movements and everything coming in here as well. And then a couple of ratios inside of here specific to your farm, like EBITDA per hectare, debt per litre, things like that. You'll have an opportunity to add notes as well. And we recommend putting in as many notes about the assumptions that you've made on the farm. Put in your assumptions here. You can choose for those to come up on the report, or they can just stay as an internal note. But it is a good thing to be able to have here to put in your own details and put in the things that you've been working on. Just remember to hit save. Right. So we've gone through all of that. We've built out our proposition. Let's go look at the reports now. So here's that twofold set of reports. Remember when I was talking about the outputs earlier? We have the financial reports. These are the things that we know that most bankers are going to be looking for. The 5-year P&L, cash flow, balance sheet. There's that summary again, all nicely formatted and ready for you to go. But like I said earlier, one of the first places I'll generally go down to is right down here and looking at those indicators and looking at the visual output, the KPIs that have come from the farm. Now, in my case, you can see that we've got a couple of wild swings here going on. If I want to investigate where is that figure coming from, let's go back up and let's go look at the report up here. Going down, there's your net profit, and then some other equity and interest cover calculations in here too. So you see there is a fair bit around here for modeling debt, because we know that's one of the first things that, or one of the big things that a lot of farmers need to work around, especially as they look to invest or grow their farms. But you'll also see there are other production metrics that will come through here. And all of this is backed up by those 5-year cash flow forecast P&Ls. If we want to pull these out, we can go to export. And this will show you the reports that you can pull out. So in my case, I'm going to pull out, say, a summary, a cash flow, and those indicators. And when I do pull those out, it's going to give them nicely formatted into a PDF for me. And if you have your logo linked into Figured, your logo can appear up in the top right-hand corner here as well. So I can pull all of these out as PDFs to share to people who aren't necessarily invited to the farm. So if you want to share this to a banker, pull out that PDF. And when you're done with a scenario and you don't want any changes to be made to it, which is great for a status quo specifically, where we're just looking at the base, lock your scenario. When you lock it, it can't be changed. In order for you to be able to change it, you need to copy it and then make changes on that copy. This is a great way to keep it locked in time, so you know anyone who logs in can't go around and start making changes. So let's lock that now. Now we've got this little padlock next to it, and it's our master scenario. So as we go into our scenarios, I may have a couple of different revisions or a couple of things that I'm working on, but I can always tell that this is my master, my locked status quo. And that's how we build out status quo plans, or use scenarios inside of Figured, working on those assets and liabilities, the income and the expenses. Just 4 simple components. The reason why we start everyone by working on a status quo scenario is because it is something that everyone can benefit from. And we firmly believe that. Because when you build out a status quo, you're just assuming that everything is the same. But now you've done that, you've got a really solid base to copy and now start making your changes to it. So if I want to be able to say, look at what happens if I expand my farm, I've got my status quo that I can always refer back to and get a sense for how it works. And then have my new copied scenario here, something that I can have a play with and work around with that's separate. A copied scenario is not linked to the old one in any way, aside from the fact that it uses the same data. So I can have as many of these copies, as many of these iterations as I want. And again, we can choose who we share that with. So I can have a bit of a play around on this and keep it to myself. Then when I've got something that I'm ready to share, I can go back, edit that, change, and allow people to be able to see the rest of the plan. So having a status quo, building on that, that's something that, again, we think every farmer can benefit from. And then you also get to be able to copy them and share them along. Finally, to wrap things up, we've gone through creating a scenario today, and we've gone through some of the reasons why you'd want to create a scenario too. Linking back to our plan that we had earlier, we are looking at understanding the now, understanding the where, and looking at how we're going to put that plan in action. So now that I've worked out where I want to go, well, now I know how now I need to figure out how I'm going to put that in action. And that's going to be coming through in next week's Figured 101 session. Now, I want to thank you all for coming in today. I hope that's alleviated and shown you how you can use figured scenarios for planning and how you can use scenarios for coming up with long-term plans. If you have any questions, please ask them using the Q&A function inside of Zoom. You'll see at the bottom is a little question bar. You can click on that and ask us a question, and I'll be around for the next few minutes to be able to answer any of your questions. In the meantime, have a great Friday. Enjoy your weekend coming up, and we look forward to seeing you next week for Figured 101 Week 4, going through the how, building out forecasts and plans inside of Figured. So thank you very much. I now open the floor to any questions that we may have.